Good morning and welcome back to the Opportunistic Trader for October 4th, a Thursday, non-expiration day, but a non-farm day. Tomorrow is the big non-farm. I have a lot to talk about today, Vince, and I'm glad you're joining me. It was an amazing day yesterday in interest rates. They went absolutely bonkers. The bond was down over 2 points, almost 2.5 points at one point, and today we followed through and we're down another 106. Yields on the 10-year got up to almost 3.25. So that is a level that is just epic. I thought we were going to crack the market at 3, but now we're at 3.25. And I know we were speaking when we got on the air, and you mentioned I think you want to talk about it. So I'm going to lead it up to you to talk about interest rates. We'll get into our regular routine, but I think it's important that we cover this, early and quickly so that people could capitalize on
Got it.
What's going on. So good
Got
morning.
All right, so I'll be concise. Interest rates are higher, stocks aren't lower. Okay, that's the thing that people have been scratching their heads about. If you look at the U.S., it seems obvious, but if you look globally, it's also considering where yields have gone recently, it's also not a big deal. By big deal, I put that in quotes. Why does it not matter? I think it does not matter because stocks are, and this is an inflation person talking, stock prices have been going up. In addition to the other reasons that we talk about, they're discounting a little bit of inflation going forward, inflated earnings. But what you're seeing right now, and why I think we're in an area of critical trigger for bearishness, is number one, yields are in the 3.25 area. Number two, and we won't get into details on this today, the curve is steepening. That, for me, is inflationary, and that means the Fed is chasing it, and they will have to hike again. If they hike again, that's going to kill the stock market. Number three, in the last 4 days, I don't have the number, but a ton of companies are now lowering earning expectations. So maybe they're doing that to beat earnings. We don't know. But all I'm saying is people are getting prepared for the sell-off. I'm becoming bearish and looking for a signal now to sell as a result of that. The yield number may not be the number that matters. It may be a combination of things, but certainly it is a canary in the coal mine that's making people pay attention.
Well, let me ask you a question. You're saying you're looking for a signal to sell. Okay.
Yeah.
What is that based on? Price action? Is that based on looking at alternative factors such as bonds and oil and I put out on my Twitter last night, late at night. I said, I was sitting thinking, and I don't really, we tweet a bit, but we tweet out of our office. And I said oil and interest rates, and then I was like, how can the market hold up? So it's going to be.
To answer your question,
yeah.
If I don't trade a market continuously, if I'm not tape watching a market, so let's just say I'm not tape watching the S&P right now, but I start to see, with an analyst background, from a top-down perspective, I start to see too many things lining up that are bearish, like rates. Okay, rates are bearish in and of itself, going up. But now I see now, the Fed is raising rates and the curve is now steepening for the last day or two. That is bearish for stocks, even more so than just rates going up. So that's so from the macro perspective, I get that view, and then I start looking at my system. Right. And so the trigger that I'm looking for, I'm nowhere near getting. Doesn't mean we can't sell off. But my system is basically very risk reward oriented. But right now, the closest thing I have is, because we've been in such an orderly uptrend for so long, there's been low volatility. What I do have right now is, for example, the beginnings of a signal to be. I'm not acting on this yet because this is a new aspect. The system is a momentum system. And I'm seeing a failure of momentum higher slightly now, below 29.21. It's safe to be short according to this, with a target of 20 9. I'm not tape watching the S&P right now with a target, but I start to see, this is crazy, right? 28.17. That's a weekly system. I need that stuff to come down to the daily and the hourly before I act. But on the weekly, it says we're probably almost done, and I can't act until it comes down to the hourly. So there's my point on what my system or signal is. The macro is set. I'm looking for the micro trigger.
I mean, yesterday, yeah, but I want to talk a little bit about yesterday's action. In the E-minis were up like 20 plus handles at one point, and the bond was just getting annihilated, and the market wouldn't come in, and then all of a sudden, I guess a button was pushed to buy bonds and sell stocks. I saw a little bit of an allocation trade, but not much. And I think, on the next correction, bonds are actually going to potentially go down in price and up in yield. And there's going to be really not a lot of protection. It's,
you mean no place to hide if you're taking your money out of one and rotating the other. I agree, because if you're rotating internally in the U.S., taking your money out of stocks to put into bonds, that may be cool. But the outflows of money from U.S. bonds from, say, China, they may be the ones selling bonds right now even more, are going to overwhelm any internal rotation. I think we agree on that.
Yeah, I think that possibly could be the case. It hasn't really in the last 15 years been the case. Every time the market's corrected or gone down, which is like 3 times in the last 15 years for about an hour. Only kidding.
Right.
It's there hasn't really been much, but every time they've been buying bonds, and the yield is up. Tomorrow's number, I think, is more important to the bond market than it is to the equity market, in the sense that if they're showing in any type of wage inflation or price, upward
right, confirmation of what ADP was basically saying.
And ADP was really looking more at just the job creation. I'm looking at the hourly number is a big number,
right?
For this number, and we'll see. See the market reaction. If bonds come in a bit more, I would probably be a buyer of bonds for a trade. That should bounce off of what would be negative news for that. But overall, I'm still mystified by where the price of the S&P is and how close we are. And yesterday, I think we made an intraday or close to an intraday all-time high. That we're on all-time highs, and rates have really backed up here. I mean, really backed up. We started talking about bonds, and they were 285. You're talking about almost 3.25. That's epic move. And
yeah,
I think people have, it's funny. I think investors have been buying bonds, especially the older generation of investors, and they don't really know what they have. And it's going to be interesting to see when they get their statements, and the price on their statement of their bonds are down 5 to 10% plus, maybe even more.
Right.
How they react, because they haven't seen that in forever. So,
right. The 3% CD is not going to protect you if you're worried about saving money from stocks.
Yeah,
pretty much. Actually, to add to, I actually now have a 4-hour trigger. Doesn't mean it's not going to be negated, but below 29.19, you should start being out of longs, according to what I have. So if I see an hourly trigger, I'm gonna sell it, basically, for a day trade. That's all.
Okay. We're short. We financed the position. We're basically close to about even right now. We're going to look to do some option spreading, maybe against that, to stay in the position. But tomorrow could be a very interesting day. I'm not really, I think today is like the setup for tomorrow. I don't expect crazy action. I kind of almost expect them to bounce them in a way, or try to. If they fail, then we'll get a little more serious. But, right now we're trading at your level, 19.25. What was interesting last night on the close was they were buying S&Ps like they were going out of style at 30, 31.
Right.
And now they're 19. The interesting thing to look at really is it's just crazy. The DAX, which really doesn't have any meaning to us, is actually positive. Oh, yeah, it's actually positive. It was negative, and now it's positive. You know, I guess it makes no sense, but it makes sense. So they're coming out of U.S. and buying that, you know, narrowing that spread. But overall, S&Ps look a little bit heavy this morning. Is there any reaction in gold? I see it's $4, but
yeah, gold's up $4. It's still for trading purposes between 1203 and 1206. You really shouldn't care. We are above 1206 now, but I don't like buying momentum higher in the first hour of the day. I'll buy it after the first hour. So if you want to play long here, 12 above 1206, below 1211, there's your new range. But if we're above 1206 after the first hour of trading, I'd consider getting long. Below 1201, I think we could have a problem today.
Mm-hmm. All right. I mean, I don't see much going on there.
No, the dollar is consolidating sideways. It's not really doing much.
The next thing I want to talk about is oil. We had a position. Basically, it got to the upper end of our position. We were hedged. So what I did was I'm not looking at that position anymore on a day-over-day basis. I'm just leaving that as a short against the call. And if the thing comes in $1.50 to $2, we'll be we'll be doing well again. That trade is not working for us. But I mean, oil at almost, I think it might have almost ticked 77 yesterday. I mean, it's an amazing move. We've moved $6 in the last like 6 trading days, and we're probably almost $15 higher than where Trump was freaking out with those tweets. Remember that day he was tweeting about Saudi Arabia was never getting anything for us, and we're going to remember, and all this other stuff. So
yes,
oil's up another 20% from there. So I'm just wondering, what the world is thinking and how we can sustain Brent at $86. I think it traded almost $88. So we're back at very high levels. So it'll be interesting to see how that reacts, and especially today to a lower stock market. So you've had tighter yields higher. You've had the stock market come in, and oil, I mean, it's down a bit, but it's not down very much, so it trades strong. Yesterday was an interesting one. I don't know if you saw, they came out with the number at 10:30. They were looking for flat to a draw, and they added 8.
We had like a build of 8, right?
Yeah, 8 million barrels, and
the market didn't care.
No, the market traded down $1. It actually traded down $1 and then finished up about $1, but it was up almost. It had like a $2.70 uptick from the from that level, from the lows. So I don't know if I think positions are long in there, hedges and whatnot. So it'll be interesting to see how much it has to come down to get people to take some profits. I wouldn't say liquidate, because everybody's making money, so you don't really have to liquidate. But that's been an interesting trade. There's been a lot of stuff out there, other than the SPOO just going straight up. A lot of these markets are really moving. I'm looking at bonds now. They're bid 12 ticks off the low, so they caught a buyer in there this morning. Yields got up to, I think, on the 10-year 3.238 or something, almost close to 3.25. I think they're back down at like 321, but or maybe it's
320 point. 320 spot 8 is the last, not spot, but 8.
0.8.
320, almost 321. Yeah.
Right. So the market. The market has some issues. here. The S&P again. I hope they wash them 2025 today. I'm not expecting it because it's a non-farm payroll day and they're down 13. But we'll keep an eye on that. That the trade. I mean, if you gave me a picture of the external board yesterday, and I saw all of the things that were going on, I would have told you the S&P would have been down 30 to 50 handles for the day. Not up.
Right.
So we're in like a magic land right now of the market, and it's going to be interesting to see what ends up coming from it.
Isn't that what oil did too, though? Don't you see similar personalities now? A bearish number came out, you had your quick washout, and then the market kind of absorbed it and ignored it. I mean, the market's not that efficient. It's just robot oriented, I think.
Yeah, I think it's a lot of quant, but oil, at least, for years and years and years, goes up and down and is tradable. The S&P is non-tradable. I mean, it just goes up. And
right.
But I will say nobody is ready for anything that could happen. Like if we go, like what's going down 2%? The S&P used to move 2% every day, all day, every day until until the and now we still are on that. We should probably put up like in my office like a count, like a calendar count of, we should be like day 70 without a 1% move on the S&P.
Traders held hostage.
Right.
I think it is.
Exactly. We should put that up in a trading room here because it's actually amazing. But what's happened is, 1% is now 30 handles, and the market can't handle 30 handles.
Right.
I mean, in February we were moving like that, and in February it's funny, we were like crashing, but really, the market was only moving 1.5%, 2%. So.
I think part of the part of the way to keep the market from panicking is to sit on volatility, and I truly believe that through one way or another, through dealers or others, volatility has been one of the things that's been squashed. In other words, rather than buying shares, sell volatility, and people are more comfortable. Like to your point, puts are only a tick, I don't have to buy them. And us as traders would be like, puts are only a tick, he's not buying them, he's an idiot. If we go down, he's going to get killed. Guess what? I mean, whether it's sincere or not, the false sense of security or real sense of security just makes complacency just continues until it does. Point being, we will get a 2% sell off, and that 2% will lead to 4%. In the meantime, we got to trade tighter ranges. That's how I feel about it.
Yeah, I mean, I think for right now, you're right. Let's look at let's look at the straddle for a second. So the 20 straddle, there is not an expiration today, but the 20 straddle is 75. It's like $17, $18. That's pretty rich. I mean, it's obviously non-farm day, but it's pretty rich.
Do you see week longs squaring up today?
No.
Or week shorts, if anyone.
I don't see. I don't see it. I don't think anything is gonna listen. The one thing that I'll tell you.
Well, that's why I said week. You know what I mean? Like you and I both know the number doesn't mean as much as it used to, but
Well, I'll just say this:
is anybody squaring up before the number anymore?
No, I don't think so. But maybe a little bit now. Maybe they're a little skittish. But what I'll tell you that's interesting is the S&P closed the last month at like 20, and we're actually down. It's Thursday. After being up pretty much all week, we're now down. So, for the quarter, not that it means anything, stocks are a little bit lower. $2, but they've tried to mark it up every day of the last 3 or 4 days. So, that's something to look at. And I think if we come in 10 to 15 handles here, it could lead to something bigger. But again, we have the number tomorrow. It's all relative to wage inflation. How many jobs are created. I think we may see a 3-figure in front of our number tomorrow. So I want to be quoted on that, Vince. So when it comes out, you'll be like, "Yeah, Larry said it would be in the 300s." But
I will definitely do that.
But I think it's going to be much.
You're abandoning your 200 number.
Yeah, exactly. I had 200. Well, no, I always a buddy of mine. We always talk about like it's 200. And it would come in 185 or 210 or. I mean, this is going on years and years and years and years. So maybe we're going to get a bigger number tomorrow. And
okay.
Again, I don't know.
But wage inflation is actually what you are focused on.
I think, number aside. Listen to me. I think that's the most important thing.
Yeah.
That being said, we'll see what the reaction is. Bonds are interesting. They've really bounced here. They've almost retraced half of the down move today. So keep an eye on that. They've been bid since the opening. At 820. Not that there is an opening, but the floor opening. They've come in as buyers. On the market. So we'll see sort of. How that trades. Yields are definitely up. Yields are definitely a problem. Markets look a little skittish. I would think if the S&P gets below 15, we could get washed out. But again, I expect it to, once the stock's open, to sort of mellow out and be, waiting for tomorrow's number. That's what I'm thinking. So that's just my thought on the day. And obviously that thought changes as we go, but I don't think unless we break down another 5 handles that there's going to be crazy trading today because you have tomorrow.
Right. The only thing I've noticed in gold, and I don't know if you've noticed it in other markets, but with China out, officially out, doesn't mean they're out. The markets, gold has been, and the FX pairs have been changing after 11:30 a.m. when Europe shuts down. So just, I don't know if you've seen any change in the S&P or.
I mean, the S&P is. What I will say is, we give out the imbalances for the close, and they start coming out at about 2:00. They're not really real until after 3:00. But yesterday was strange. It was showing to buy, then it was showing to sell, and then it was showing to buy, all within like 30 minutes. Like I guess that's the new game, in town, is that. So,
right.
Always keep an eye on that. Usually doesn't mean anything, but what's interesting is if we get once a week or once a month a good read that makes people money, it's worth it. It's worth having.
It is.
So keep an eye on that. As we speak, the S&P caught a small bid, but there's not a lot. Again, there's not a lot going on. Straddle is pricing high, so I do expect to move tomorrow. I don't know if you saw comments out of PAL or you want to discuss those from last night, or late yesterday when basically he was being more aggressive. You touched on it a little bit by saying, there's going to be one more hike priced in for next year, but I don't know if you have any other thoughts on that.
The only thing, I mean, just from I think what we're getting is a little bit of I think Powell has been sitting on his aggressiveness, waiting for numbers to confirm what he wants to say. And he was hawkish, and then he said something very dovish about a month ago. I think it was at Jackson Hole, and then I think as numbers come out, he peels off the layer of what he says he really wants to do. And by that I mean, we'll hike numbers. We'll hike if we have to, and then ADP comes out. And he gets even more aggressive in his speaking. So I think if tomorrow's jobs number confirms the last couple numbers, for him to say things like we might shoot for we might shoot for higher than neutral rate, whatever neutral means now. That's an aggressive statement, and I think he's getting more and more comfortable being a hawk as numbers back him up, as opposed to Yellen, personality-wise, who what I think come out and make red herring statements and see how the market reacted. Powell lets a number come out, and then he says, "See, I told you so." And now the market is starting to price in a probability of a 3 hike year next year already. So I think he's going to be a hawk until we sell off. I think a number comes out and he follows it up by saying the economy is robust. So I would just look for Powell to be cautious and not throw words around. He's more like Greenspan. He'll talk after the number and then confirm what is already there. I don't see anything dovish coming out of him until we sell off. I don't know if that helps, but that's what I say.
But I think it's maybe the position that he's put in because the Fed is really behind the curve. They're obviously catching up, but the market is so outpaced the movement by the Fed moving, a quarter every 3 meetings that I think the Fed is concerned. I think they're concerned about inflation. I think they're concerned about asset prices. I think they're concerned about a lot of things. And he's very different than Yellen because Yellen wasn't real. They put Yellen in as literally a puppet. I think she made one move or 2 moves in her entire tenure.
I agree. He's playing catch up. I do agree. He is playing catch up, and in terms of the easy money. And I think, look, you're right, and I think he's, when he says things like, we're looking to actually raise rates above our original target, or in so many words, he'll say that. I think he's saying, he's admitting we're playing catch up. So I don't disagree with you. I think there's going to be more hikes than we bet on. I just don't. The stock market wants him to. The higher the stock market goes, the more he'll raise rates. I think he's quite comfortable causing the crash a year from now, as opposed to tomorrow.
Yeah, I don't know if he's going to want to cause a crash, but
well, I mean, it's a euphemism. I don't mean that literally.
Yeah, I don't. The market's held up really well relative to what is going on here. So it's going to be interesting to see how everything shakes itself out from these levels. I am looking at the board. I am not bullish, but again, I'm respectful of the market at this level. But it's at such a high level that where does it really have to go? I mean, it's up so much. We're up 9 or 8.5, 9 for the year. S&P, Nasdaq's up almost double that. Where are we going? I mean, we haven't even. Everything has gone bonkers. I mean, oil is up 35% for the year and 60% year over year.
Right.
Which
so
is,
how could that not be inflationary? How can it not be weakening the dollar? Those are questions that are rhetorical. I think inflation is here. It is here right now. When you have Powell saying things like, I expect to see gradual increases in wages. That to me says, oops, we're going to have wage inflation. When Powell says expansion can continue for quite some time, that's Powell saying, all right, I'm gonna raise rates again. We're going to sustain the expansion, but in the second sentence, he'll say we may raise rates past neutral. I just think they are playing catch up, and oil is telling us that the dollar is. I think we're going to have inflation and recession. What's the word? Stagflation. I think that's coming. That's all.
Well, we just got to make it through the number on Friday. Then
so what are we going to? So then help me. What are we doing today?
Today,
since I'm looking. help me.
I'm gonna be sort of looking around. I'd like to sell some bonds into some strength here because I do think that the move continues. That market is about 20 ticks off the low, only down 21 on the day. So they brought everything sort of back. So I'd like to maybe look at a trade in there, set some stuff up for tomorrow for non-farm option wise in the S&P, trade outright S&P. Again, we're short S&P from around this level. If it dips down, maybe we look to take it off. Not one of our better trades, but at least we're making money on that, and we're here to play another day. As far as equities, looking at stocks, they're kind of mixed. Facebook is trading above 160. Yesterday was interesting there. There was big volume below 160, traded 160, almost 164 yesterday. So, there's been a lot of, movement in individual equities. We might look there. Micron is trading at 44.62. The thing is with these equities, unless you're in the really big ones like Amazon and Apple, which has become a great day trading stock, or what I would say is a momentum day trading stock. If it's going up, it just goes up all day. If it's going down, it goes down all day. So,
Right.
we'll look at that stock. We'll be in there for today. I kind of want to remain light. I may want to sell the straddle in the S&P for tomorrow, depending on the price. Because if it's $18-20, it's fairly easy to manage. With using stops in futures. $20-25 away from the market, which shouldn't go off. But then you get hedged at those levels. Other than that, just looking at the the currencies, not a lot there today. And that's really it. That's what I'm seeing from here. I want to keep an eye on volatility. We'll keep an eye on markets in general. The emerging markets are back down. They got hammered again. So, where's the FXI? FXI is trading on my screen. Oh, here it is. FXI is killed. It's actually almost on the low of the move. It's down another 1.5%. It was down 2%. So it's down 3.5% in the last 2 days. So that's pretty big. And we don't move, and we don't even pay attention to it. So, I guess those markets are much better to be short than our market. So, we'll keep an eye on that, although it's not really helping us. And that's it. Oil's down about 50 cents, which isn't really much after the move it's had. I expect it to trade in here, and then probably, it looks unfortunately looks pretty strong in general, but maybe this is the top end of the range, and it's a good area to be short for a period. And that's
So
it.
retracement, even if you're bullish, it might be a swing trade lower here.
Yeah. And that's it. I don't really see much else that's poking my interest. You have any other thoughts in closing?
I'm just watching the S&P for a possible sell signal in the next hour and 23 minutes, and I'm looking to trade gold above 06 if we're there an hour and a half from now.
Now let me ask you, if you would sell, let's say you said the SPOO sell level is at 18.
Like I could be short the SPOO right now under with a stop of 29.21. And it doesn't mean I won't get stopped out and we won't sell it anyway.
That's very tight.
Of course, yeah, it's very tight, but it's only for a 4-hour trade. So it's kind of something that I'd be able to put on more than once if I'm wrong. So the system is volatility based. So if I get stopped out, it also says, well, you might want to consider reversing here. So it does get chopped up a lot. There's no doubt about that. But yeah, it's short with a 21 stop. That's why I'm not trading it. It's a very low, on a scale of 1 to 5, it's a 2 in terms of the type of trades that I like. Like yesterday, I had one that was really good in gold, and I took myself out of it because I was nervous because silver didn't drop. And it was risk 1 to make 2, and it ended up was risk 1 to make 4. So I'm looking at the S&P to be short it, and I have a weekly that says it's overbought. I have a daily that says nothing. I have a 4-hour that says sell it, and I'm waiting for an hourly to give me the go ahead because the 4-hour is my, until I get the 1 hour to confirm it. For me, I'm bearish biased, but I can't do anything yet. That's really where I am.
Yeah.
I mean, if you look at a 4-hour chart, doesn't that look like one of those morning stars, which I don't know much about? I want to sell it. Like the system says you should sell it, but I'm like, that morning star tells me not to do it, or whatever you want to call it.
You know what's interesting, and I just peeked at it. Volatility is almost in the 13 handle. Not that this all means anything, but if we had a 1% correction, vol would go to 16. It would go to 16. It's
no doubt.
It's off of a like 1% correction. This is it's almost crazy. I just peeked at it and I was like, because Mike kept saying, vol is in 1150, whatever, and then you look up in 2 days it's to 13, and
Well, didn't you talk about a friend of yours who's playing volatility and making money? I think we are now entering, as a person who likes to trade trends, Larry, I think we're entering, if we haven't already been in an age where trading the range of volatility, meaning buy it cheap and stick with it, is better than, buying volatility because it's going up, which is the way I used to play. Like you just said, a 1% move in stocks gets you a 3 vol pop in the VIX.
Well, that's why I was saying, it's interesting in a way to set up these strategies. And I spent part of the day yesterday with someone that runs a volatility strategy, and they do it a little bit different. They don't buy pure volatility. They'll buy vol, and then they'll buy equities or whatever they're doing with these computer quantitative strategies. And what's interesting to me is if you're really looking for a down move, the best way to play the down move in any way, it's the most painful because if it doesn't happen, they just crush the vol. But vol moves so much faster than the market that it's it's unbelievable. I mean, the VIX is up like 10% today, and the October volatility index is trading at 14.25. We're trading at 13, so it's pricing for the next 3 weeks another 10% rise in volatility. That to me means that we should get a little choppy in here, and it should become a little bit more uncertain. So we'll keep an eye on that. But the VIX in general is the better way in my mind to play the short side of the market if you actually believe that the market is going to go down.
Yes, because you'll hemorrhage less if you're wrong, and you'll make your money quickly and be able to get out if you're right. That's I'm starting to look at it that way as well.
No, but the truth is, you have to play you can't play the products around VIX because they have inherent decay. And the reason why it was interesting, I sat with this guy yesterday and he was going over it with me. A lot of these products like UVXY and the VIX and and the all these products, and the one that blew up, they have individuals trading this stuff. Okay, or
leverage
quants.
ETF. They have to keep rebalancing.
Right, and they're rebalancing, and they're selling low and buying high, and they don't have enough volatility when we go down, and they have to get in volatility when the market is moving lower. And and it's it's interesting because that is a very difficult way to trade. The opposite way of the way that we trade. We're trading it as the opposite. We want to buy low, sell high, trade around, make money. And these guys are, unfortunately, they're set up to do the opposite.
They're set up to trade as if they had negative gamma all day long.
Right. And they never have enough when we go down, and then they have to get into it. But it's interesting. The volatility is, it's very low. It's at actually, almost all-time lows. And especially after it traded over 50 this year in February, it's really low. But on any little down move, the market goes the other way. So, you got to keep an eye on that. But in general, that could be a better way to play the short side, especially if you want to sit in a trade, is maybe buy some volatility. I wouldn't buy the products on it because I just said they're inefficient and you can't make money. But to look at
just the straight VIX futures,
yeah, exactly.
or plain vanilla. I mean, you may not want to play plain vanilla options, but look, I traded volatility as an asset class for a living, and I was a person who would trade trend. So if volatility was trending higher, I'd get on the wave and buy it and sell it to the next bigger fool, so to speak. And if it was going lower, I'd sell it, and I'd sell it because it would skate a lot more than it does now. Now, volatility is a range trading product, and I want to buy volatility as an asset class when it's cheap, in a diversified way, and just instead of swinging for singles and hoping for a home run, it's like I'm buying insurance in every product on earth, and all I need is one of them to move, and I'll have a home run quickly rather than slowly. That's a strategy I think worth looking at.
I got to chime in on one thing because Larry was just talking about how the VIX products are broken. I put up on the upper right-hand chart for everybody to see the UVXY, which I believe is a 2-time short, 3-time short. And so it did another split. Larry and I have watched it over time, and I just had to count the zeros. And I'm doing it again because basically if you would have shorted this thing in 2012 with all the split adjustments, in 2012, Larry, where do you think it was trading? I have it up for everybody to see.
Oh, I kind of have I have a little inside information on that as far as I've looked at it before, but I would say, I don't know, 800,000 or 400,000.
3.5 million.
Right. I mean, it's actually an amazing thing. So
it actually shows in the chart the 10-for-1 stock split, 1 for 4, 1 for 5, 1 for 5, 3.5 million, and it's currently trading at like 34. They just or 37. It just did another split recently.
Yeah, I mean, it's time to stop killing the investor and put that thing to sleep.
You can see now I've changed the chart to be only year to date. Keep going back, so you can see here. But it's a complete downward slope from the 80 level, so it's been cut in half. Whereas the VIX itself is actually up on the year right here. It just shows you how you have to be careful with these ETFs.
Yeah, especially leveraged ETFs. The straight ETFs aren't as big an issue. Like if you're buying SPYs or Qs or whatever, they track really well. But any kind of leveraged ETF, it is stay away. There's better ways to play it. We're doing it differently. We're doing futures options. We're doing options and futures on the actual underlying. So you don't really have the risk of all of the stuff that we're discussing now, but those products are absolutely broken. What's interesting, just quickly touching, this year, the vol strategy in general is down on both sides of the coin. So if not technically on the actual underlyings, because volatility is actually down a lot for the year, or decently for the year, like 20% or something like that. But if you're a long volatility or short volatility player this year, you got destroyed. You got destroyed in February. Short volatility, it was up 90%. you know, you got blown out. And then the long vol player, if they didn't liquidate then, are lower than where they were basically at the beginning of the year. So that's an interesting thought on that strategy.
Makes you want to be a market maker again.
I feel bad for the guys. What was that product, Mike, that went out of business? Was it XIV?
Yeah, the inverted VIX, like whatever it was, 4 times.
Literally, if they were in business right now, they'd be killing it. But they somehow nicely blew everyone out of that trade, and no one realized that it wasn't really a security, that it was really a warrant. And if the volatility went up 50%, that product would basically be down 90% and delisted. So people got really crushed, and we traded it that day. Actually, we didn't. We were gonna trade it, and then we spoke to one of our brokers on it that covers us on the street, and they were like, listen, you don't want to buy this thing. It's, it's not really a stock. So we got saved, but a lot of people really got hurt because as a trader, you're watching a stock trade at $110, and then it's trading at 80, then it's trading at 60, then it's trading at 40, and you're thinking to yourself, this is ridiculous. How could anything go down like this? But it actually went to like $6 that day. So, that in itself was, was pretty amazing. That day was amazing. Although that was only 7 months ago, it feels like a lifetime ago. So, but that's sort of a look at volatility from the inside. I think you want to play that to the long side if you do think the market's going to go down, because that will move much faster than the market. It's funny, I was just looking at SPOOs, and they were trading at 17.5, and I was going to comment to you, Vince. I'm like, maybe it's right to put the short on, and then I look back up, it's trading at 21.
Exactly. I think that I would have been chopped up. So that's. I need that confirmation at the
welcome to the S&P, my friend. Chopped is its middle name. It's not that easy to trade.
No,
but,
I think in fact the high tick just now in this 4-hour thing is 22, right? And I was saying it's okay to be short below 21 and change or something like that. So yeah, I mean, I can't I can't put anything on yet.
I think a lot of it's interesting. The bonds just caught an incredible bid. They just rallied. Oh my God.
Yeah, we're starting to see some volatility in that fixed income. The 10-year's moving. The overnight low is 117.19.
The bond's a point off the low already,
trading,
and the day hasn't even begun. So it's pretty interesting out there right now for those trades, and we'll keep an eye on everything. I got to get to the markets and put some positions on. Or look to put some positions on, so I want to focus a little bit, and that's it. Do you have anything else you want to talk about in closing, or are we good?
I don't know, unless Mike does. I just have gold on my radar in about a half hour, and I have the S&P with a possible sell signal if we dip in about an hour and 9 minutes now. So that's it. I'm watching those two, and I'm actually watching the VIX now.
Just on the schedule for the day, we have at 10 o'clock, Larry's going to be coming back on question and answer. Anybody have any questions, ask Larry then. 10 o'clock, and we'll also touch on some topics there. Then at 11 o'clock, we have, Bryn Kelly, who's been joining us regularly. Bryn has run some of the largest merchant energy trading desks in the world, and will be on after the natural gas inventory report to break it down for us. She's always got some great information there. And then 12 o'clock, Tracy Schukart, talking about technical analysis and some trading opportunities that she's seeing. And then At 1:30, we're going to replay Vince's gold post. It's posted 7:30. Vince is on live. The gold fix with Vince Lancy at 7:30 every morning. We're going to replay that at 1:30 because I know it's a bit early for people that aren't catching it. And then we also might have some programming changes. We'll detail everybody about it a little later, but we'll confirm that in a little bit. But that'll be for going forward. But that's the plan for the day.
All right. Well, listen, I will be in the chat all day. I wish everyone good luck today. I think there's a lot of opportunity, so we'll try to give you good thoughts. Anyway, I wish